2013. And on the foreign scene, at least 10 people have died and more than 60 injured in a violent clash between Islamist protesters and police in Dhaka, the capital of Bangladesh. Hifazat-e-Islam wants greater segregation of men and women as well as the imposition of stricter Islamic education. The government, which describes Bangladesh as secular democracy, has rejected Hifazat-Islam's demand for a new law on blasphemy. Well, there you have it. Business Morning continues.
Thank you so much, Adisha. Well, let's head now to markets outside our shores. Trading action has commenced in markets in Asia and Europe, and we're looking at confidence making its way back to the Asian bourses this morning, all boosted by a brighter jobs outlook in the U.S. and higher commodity prices this morning. Well, last week, Friday, the much-awaited non-farm payrolls data hit the markets, and the U.S. economy added 165,000 jobs in the month of April, far exceeding market expectations. The markets had been expecting the jobs to come in at 140,000. So we saw stocks beginning from Wall Street rallying on the back of that. So let's take a look at the Asian numbers. The Nikkei 225 unchanged from Friday's close. Markets in Japan are closed today for a public holiday. The Hang Seng Index in Hong Kong rallied close to 1%. Markets in China over 1% added to the Shanghai Composite Index. The ASX 200 in Australia up by over 0.5% at 5,156.20 points. The commodities markets, we're seeing oil, gold, copper, platinum all rallying this morning on outlook for demand for the black gold especially. We're looking at investors believing that there will be continued growth and demand rather for the black gold. Let's quickly move on to Europe now. Europe is in the green across the board. However, there is cautious trading right now. The mood is a little bit sour. Negative economic data released this morning showing a disappointing PMI data where the Eurozone's business downturn dragged on in the month of April. Well, the block's retail sales data is also due out for release. I believe that has been released already, 10 a.m. London time. So the investors, the markets is already digesting that particular data right now. The London 5100 up close to 1%. VITO DAX in Germany up by about 0.25%. The Paris CAC 40 just managed to make it into positive territory, up marginally by 0.01%, while the markets in Switzerland, that's Zurich SMI, also trending in positive territory, up 0.05%. Let's cross over to Wall Street. We saw Wall Street longing out the week on a very strong note, of course, all based on that better than expected non-farm payrolls data. That's the number of jobs created outside of the agricultural sector in the U.S. economy. 165,000 jobs is what was added to the economy as reported by the U.S. Labor Department. So, of course, that was excellent news for the U.S. market. The Dow up close to 1%. So we're looking at gains of over 1% across the board for the major gauges, the S&P 500, the NASDAQ, and the Russell 2000. The Russell was up 1.55%, the best performing gauge on Wall Street on Friday. Now, since the beginning of the year, looking at the year-to-date performance of this major gauges, the Dow has gained 14.2%. The S&P 500 has climbed by 13.2%. The NASDAQ has climbed 11.8%. While the Russell 2000 has climbed by 12.3%. Those are the numbers from the American bourses, but still talking about year-to-date performance, the All-Share Index, as here in Nigeria, that has now logged a 25.04% climb so far this year. Obviously, still one of the best performing African stock markets on the continent. Now, when we return after this short break, I'll be talking to an economic policy analyst, Kola Ogunleye. Will be looking at the Nigerian economy. It's not yet, we're very close to half year. We usually take a stock at half year, looking at the macroeconomic indices, how the economy has performed, from sector to sector. But Kola will be here to share his thoughts on some key economic issues. We'll be right back.
wherever and whatever your banking needs, Guarantee Trust Bank will be there, now and into the future. Because you're at the heart of everything we do. Guarantee Trust Bank, proudly African, truly international.
Welcome back to Business Morning. Before I bring in my guest, Kola Ogunleye, an economic policy analyst, to look at the Nigerian economy, let's quickly go to our Eye on the Capital Market segment. I have David Andoring. He's standing by now, live from the trading floor of the Nigerian Stock Exchange. It's an association with Guarantee Trust Bank. Welcome back. David Andoring is online, calling live from the trading floor of the Nigerian Stock Exchange. Good morning, David.
Yeah, thank you very much. Good morning. Happy to be with you.
It's a pleasure having you on the program. I'm looking at the key indicators for last week. 5.8% is what the all-share index added. Obviously, a new year high for the index. Also for the market capitalization, 11.2. Now, it's obvious that the key driver for last week was the earnings. We saw major heavyweights, particularly from the industrial goods sector, rallying last week. Now, share your thoughts on this rally last week and what perhaps we can expect today.
Yeah, last week was quite wonderful in the equities market on the platform of the Nigerian Stock Exchange. The all-share index hit a new high of about 35,109 points. Which is a wonderful development. That performance was driven principally, just like you mentioned, by the performance of the industrial sector. Throughout the week, Dangote Cement was upbeat. Other stocks in that sector, like CAP, as a result of the impressive results and the distribution to investors, also appreciated significantly to pushing the industrial sector. USCN was also there, together with AG Leventis. They all propelled the industrial sector into that impressive performance. The banking sector also performed exceedingly well last week. And so one would say that with the spectacular performances of the industrial sector, together with the banking sector, the all-share index was able to hit a new high. We are still having full-year results with impressive distributions being made to shareholders hitting the market, the latest of which is National Salt of Nigeria, NASPON,